The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to The Trader's Edge. I'm your host, Steve Rhodes, and thanks for joining me, folks. You know, I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. I'm also here to inspire you. Absolutely, I want to be able to do that each and every day, but more importantly, I want to help you to lay the groundwork for being able to lead an inspired life, because leading an inspired life, folks, that is what it is all about. Now, my personal outcome is to become better each day. I hope that's the same for you as well. And I do this by always increasing my skills out there. So let's go take a look at one of our tools for being able to increase our skill. I call this the tool of labor, folks. So the tool of labor, you must learn how to translate. Listen, you got to learn how to translate wisdom and strong feelings. I know you've got strong feelings out there. You've got to be able to translate that, to convert that into labor. Why? Because, folks, the miracle of the seed and the soil, it's not available just simply by affirmation, just simply by wishing, folks. It's only available by labor out there. Now, you got to make rest a necessity. No question about it. Our man Tommy, he got some rest. I think I could use a little bit of rest. Probably you could. Just like the markets, folks, they're resting right now. They've been consolidating basically ever since the jobs report, or shortly after the jobs report came out on Friday. Just simply been trading sideways. They're resting. But, folks, when you rest, only rest long enough in order to gather strength. That's what the markets are doing out here. The question is, are they gathering strength to go higher, go lower? We're certainly going to be able to take a look at that. And, folks, what I want you to understand is the few who do these things, who utilize these techniques, they're the envy of many who only watch, folks. So success, it's neither magical nor is it a mystery, folks. Success is the natural consequence of consistently applying basic fundamentals. Whether it's A to B equals CD, whether it's Fibonacci retracement or expansion, those are all the things that we teach you here at TFNN. You can watch us live on TigerTV. If you're listening to us on the radio, we absolutely appreciate you doing that. You can always catch the archive of this show on Channel 9. If you are just simply have access to your computer or maybe your mobile device that is able to get video on it, you simply can go to the homepage of TFNN.com. Over on the right-hand side, you'll see a little area. It's got some little red boxes around it, or diamonds around it. Probably diamonds, because you're a diamond in the rough out there. You can click on that. You can bookmark that on your device, and you'll be able to watch us live. And, folks, I'll leave you with this last couple of things here. If you don't like how something is in your life, just simply change it. That's all you've got to do. Why? Because indecision, folks, that is the thief of opportunity. Anyways, let's go take a look at these markets here right now. Yesterday you had the Dow close down 36 points. The futures are up 46 points right now or so. You had the ES Mini, or the S&P finished down 2. Right now you've got the ES Mini. That's what I've got up here on my screen. That's trading out at 1350, 250. That's about 3.5 points above the high of the close. Yesterday you had the NASDAQ up right now about 10 points. NASDAQ down 6 points yesterday. Small caps off a couple of points. Small caps up a couple points. Talked about resting, right? The market is just simply resting. Maybe a little bit boring for you, but there's information out here. We're going to go under the covers. We're going to take a look and see what's going on out there. If we take a look at other things around the marketplace, King Dollar up 5 ticks right now. Gold up $9, trading out at $15.98. Silver pulling back a little bit, down about 24 cents. About 2 cents. I apologize there. 2 cents. Trading out at $27.42. Light sweet crude off 59 cents right now. Trading out at $85.40. Quick tour around Europe. You've got the DAX up 72 points. So we're absolutely going to be taking a look at the DAX. Why? Because this is a one world market out there. You've got the FTSE up 50 points. They didn't get the handoff that Asia gave them last night. Why? Because you had the Nikkei down 39 points last night. You had the Hang Seng off 31 points, and the Shanghai off 6. Our call-in number, 877-927-6648. And it is Terrific Tuesday out here, folks. And now at TFNN on Terrific Tuesday, well, we've got, what do we have? 7 hours of programming. You got Tom and I doing the Money Master show after this. Kate Stalter from 11 to 12. Victor Jones, commercial-free, uninterrupted from 12 to 1. Darryl Martin, the Diagnostic Trading Hour. That's the newest addition to the TFNN family. He's on from 1 to 2 today. David White taking a little bit of a break, but he'll be going 5 days a week. He probably doesn't want to hear me say 7 days a week, but he's going to be going 5 days a week from 2 to 3. He's off on Tuesdays and Thursdays for the next couple of weeks here. 3 to 4, the permanent warm-up band for the Tom O'Brien Show. 3 to 4 is Ken Shreve, and then Tom from 4 to 6. So let's take a look at what the ES Mini is doing here right now. Yesterday when we came in, we were talking about the bullish engulfing, one of my favorite candles out there that occurred coming into about the 3 o'clock time frame on July the 6th out there on Friday. And you got a confirmation on the following candle. That really set up your area of resistance out here. Let me refresh my screen here, make sure I've got all of the data in here, because I don't think that I do. So there we go. Now we're taking a look at it. Okay, so we set up the area here of support. Now that support was pierced momentarily coming into the 12 o'clock time frame yesterday. So you had a candle. It was a close below that area, closed back up above it. You can see just simply for the entire trading session, never really since coming off of that, what I'll call jobs report, the first 30 minutes response on the jobs report. That's this candle right here, folks. That is the 8:30 to 9 a.m. candle. That was this long candle down. In this case here, you had the ES Mini trade from 1358 all the way down to 1349. You continue to trade lower, but what it really has done is it set up this consolidation area here that we're looking at a 30-minute chart. Now, this morning at about 5 a.m., you did have the ES Mini move up outside of that. Now, the black line going across here, folks, that happens to be that 9 o'clock time frame out there. That is what I'll call jobs report candle. And right now, you've got the ES Mini trading inside there. The ES Mini coming off of the lows this morning at 4:30. The lows out there being 1343. Moving up to a high of 1355.25. What you want to do is you just simply want to understand, what the retracement is. Typically, you're going to see a 0.618 retracement. That 0.618 would have gotten you down to 1347. Probably 1347.50, 1347.75. It actually gets down to 1348.50. That, folks, is just a little bit beyond the 0.382 retracement. If that's the only retracement it does, then what it's done here is just simply setting up an A to B equals CD up pattern. Where would that take you to? Well, you'd use as the A point, you'd use that low at 4:30 this morning. You'd use the high coming in at 7 a.m., and then the pullback that you had coming into 8:30. The 1-to-1 takes you up to 1360.76. 1-to-1.272 up to 1364. Now, what you would also do is you'd come all the way back here into the high that was generated at 8 o'clock on July the 5th. Why? That was the full moon high that was out there. Full moon actually came in on the 3rd, but if we take a look at July the 5th out here, take a look at the futures, that was the high that was put in. The high out there actually at 7:30 came in at 1375. So what you'd want to do is you'd want to take a look at your retracement from that high down to the low that was put in yesterday at noontime. So let's do that. We'll use our retracement tool. We'll go from that high down to the low. And what you will see is that 0.618 area. Folks, let me maybe make this in black here. There we go. Might be a little bit easier for you to follow along here if you're following along on the home game version of this. And you'll take a look at the 0.618 is at 1362. So at 1361, you've got a 1-to-1 A to B equals CD. At 1362, you've got a 0.618 retracement. What does that set up? That sets up a Gartley sell pattern. But you'd have to wait for the candles to give you that signal, because it could just as well travel up to 1368. Folks, that's the 1.618 A to B equals CD. I suspect that's really what it wants to do. Why? Because when you take a look at the retracement so far this morning, not a full 0.618, sets up the more likely possibility that it wants to do more than a 1-to-1 A to B equals CD up. That is on your ES Mini. Let's go take a quick spin around Europe here. Let's go see what good old DAXI is doing. Of course, my daughter would like me to say DATSI for Datsuk in the Detroit Red Wing. But we're going to go see what DAXI is doing. The DAX out there, I've got to punch the right screen up here. Okay. So now world charts. There we go. So if we take a look at the DAX here, the DAX had broken through the uptrend channel. So if you've been watching along on Tiger TV, you know we've been showing this uptrend channel here in the DAX and some of our markets as well. The DAX uptrend channel beginning in September of 2011. And the DAX broke out of that uptrend channel, really did that on the 31st of May, had conviction on June 1st, simply got back up inside there on July 3rd. You know, it penetrated that area July 2nd. You tested it on July 5th. Not you, but the DAX itself tested it on July 5th. Still stayed with inside there. However, when it came back after the July 4th holiday here, you had the DAX close lower. What is it doing today? Coming back and trying to test that area, which would be normal, folks. So now we're going to have to watch. The DAX will certainly give us some leading information out there. You've got the DAX closing in about 2 hours and 12 minutes or so. So you want to pay attention during the Kate Stalter's Small Cap Roundup show at 11:30, or tune in and identify the DAX. In fact, if you're watching in the Tiger's Den, you'll be able to see what the DAX is trading at. Just simply by taking a look at Tom's screen out there. And yes, Tom is back. That's a beautiful thing. Folks, if you haven't tried the Tiger's Den, go to the homepage of TFNN.com. Click on the Tiger's Den. You'll be able to try that absolutely free for 30 days. Great group of folks in there, traders, people that can help you almost nonstop. And so watch the DAX here today, because that is going to, maybe it'll stall out here. Maybe it'll, just touch the uptrend channel. But expect the DAX here over the next couple of days to at least test this area and give us an idea whether it wants to try to get back in there, or it's just simply going to be a rejection, setting up an A to B equals CD down. In the DAX, if it's just setting up an A to B equals CD down, that A point is going to be July 5th. The low is going to be today, and the C point would probably be right somewhere around the trend line, taking you all the way to the gap up of June 29th. Get that date in your head on your charts, folks, because that gap is pretty powerful. Or we think it is. We'll see, folks. 877-927-6648. Dow futures up about 60. ES Mini up 5 1/4. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage of TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. You've got the futures up this morning right now. Dow futures up about 61, ES-mini up about 5. If we take a look at earnings in the pre-market, you had Alcoa report earnings yesterday. They're trading up 8 cents, so up 0.9%. Trading out at 884, closed at 876 yesterday. WD40, ticker symbol WDFC, trading up 98 cents. They closed out, trading down 98 cents. They closed out at 50.42. Last trade just fired off at 49.44. If we take a look at what else, you got Schulman Inc., SHLM. They're trading up 28 cents. They closed at 20.23. That's up 1 0.3%. PriceSmart, PSMT, they're going to get hit this morning. They're down 6.4%. That is down $4 and change. They closed out $63 yesterday. Let's see, what else did we have? You got Helen of Troy. Helen of Troy taking it on the chin here. HELE. They're down 7.5%. That's down $2.50 in the pre-market. Penford, PENX. They are down about 1.5%, down 14 cents, though. That is what is primarily moving in the pre-markets here with regard to earnings releases. Coming up after the bell today, you've got OCZ Technology. OCZ is the ticker symbol there. Healthcare Services Group, HCSG, the ticker symbol, and VOX, VOXX. Otherwise, a relatively quiet market here. If we take a look at what's just popping normally here and what's dropping in the markets, you got Apple trading up right now. They close at 613. They're trading out at 618 in the pre-market. ASML Holdings, ASML is the ticker symbol, closed out at 48.46. They're trading now at $52. So that's a nice little pop out there. BHP Billiton, they close at 64.34. They're trading up at 64.90 right now. If we take a look at, you got Facebook actually trading up a little bit as well. They close at 32.17, 32.37, so no great shakes there. On the downside, leading the charge, Mako Surgical. They reported, gave some poor guidance out there, reduced guidance, I believe. They closed at 24.61. They're getting cut in half. They're trading out at 14.70. I think that's what it was, just simply their guidance here that they had given for their Q2. So they're getting chopped. We'll go take a look at that after it opens. Certainly that's going to pull back into a high volume area. You've got Senior HSG. SNH is the ticker symbol. They closed at 22.53. They're down to 21.90 right now. Applied Materials closed at 11.01, down to 10.40. What did Applied Materials do here? Not anything reported. So you got Advanced Micro Devices, AMD. They're trading off this morning down 512. They had closed out at 562 out there. What else do you have here? Intel taking a little bit of a hit this morning. 26.17 was their close. 25.79 is what they are trading at right now. Let's switch over back to the charts here. Let's go take a look at the euro-US dollar currency pair, because really, you know, that's where you're going to get your primary hit or miss on the King dollar. King dollar now pulling back just slightly down 3.5 pennies. What's that all about? Really, the queen here. If we take a look at the euro put in its low, folks, coming in at 7 o'clock on Sunday evening. Now, that was after a cascading drop here. You know, if I pull this 30-minute chart back up here, you can see how just simply Niagara Falls on the euro began that tour on June 29th when it was trading out at 126.49, and just simply, you know, hit the falls and kept moving down, hit the bottom of the falls. That was down at 7 o'clock on July 8th. This was on Sunday, and when it made a low out there of 1.22548. Now, as the euro made that low, and I'm not saying that's the low that it's going to be, folks, but right now, as you take a look at chart patterns, if you're trying to understand what's going on in the marketplace here, you know, you certainly want to be able to follow the currency pairs out here, and it's the euro-US dollar currency pair that you really want to take a look at. After that low coming in at 7 o'clock, what you can see here, what you should see, is you should see expansions of swing points. That's when you take a look at these numbers. Maybe you can't read all of these, but what you can see is that the euro started making higher lows out here. And all the expansions, really, when you take a look at expansions of swing points, were to the upside. Anything to the downside was really a retracement. That was the case all the way up until this candle right here coming in at 8:30 this morning. I don't know what it was that led to that, but you did see the first expansion to the downside on the euro. You might be saying, well, Steve, why did it do that? Well, let me pull this back a little bit further. You see that 1.272 there, folks? That was the last expansion coming in. Notice, 0.618 retracement off of, you know, a waterfall area at 8:30. Jobs report Friday on July 6th, folks. That's why it backed off. Two numbers coming together, 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
The races. You got the Dow up 76, S&P's up 7, Composite up 18, small caps up 5, leading the charge on the way up. Small caps again, they are the strongest index out there. You got Microsoft up 13 cents, Intel down 8 cents. I think the only a stock in the Dow 30 that is ticking down right now. You've got Google up $2. You've got Apple up almost 5. Apple leading the charge on the way up dollar-wise, up 0.7%. ASML right behind them, up $3.68. GEVA, which is Signage Biopharma. Can't really, Sinage probably. GEVA, they're up 7%. You've got Cymer Inc., CYMI. They're a chip maker. They're up 5%. Wolverine Worldwide up 6%. Magic Jack Call, they are up 12%. That's interesting. Let's see here. We'll go take a look at that. Looks like they announced their revenues here, or they're estimating their Q2 revenues to be 37 to 38.5 million. That was versus probably a lower figure out there. I don't have what that originally was here. They are up. You've got Consolidated Energy, CNX, trading up 3%, and Anadarko Petroleum, APC, up 2%. If we take a look to the downside, Mako leading the charge down 40%. Certainly we'll take a look at that chart. You've got PriceSmart, PSMT again, down a couple of percent. Liberty Global, LBTYK, they're off 2.5%. Bridgeport Education, they got hit yesterday, down 7% again today. JCPenney down 85 cents right now. And before we went to break, I was taking a look here at the 30-minute chart of the euro, and just as we were going into break there, it was showing you, well, geez, why did it all of a sudden take that big punch down and do its first expansion into the 8:30 time frame? I don't know the reason why, but what I do know is that prior to that occurring, if I pull this back here so that you can watch us on TigerTV, as I was showing you, you're seeing these Fibonacci expansions and contractions, and they happen all the time here. Now, when you take a look at the euro on the 30-minute chart, you can see consistently that as it was making expansions of swing points, it was doing it at the 1.272 area. A couple times where it did it maybe 1.128 versus 1.272. Close enough for me. 1.17 versus 1.272. Close enough for me. Now, the last time that it did that 1.272 expansion, folks, was coming into 6 a.m. At the same time that it was doing that, you were also getting a retracement of the 0.618 area. So when you have multiple Fibonacci numbers that come together, that's going to give you an indication of a strong area of support or resistance. In this case here, since the euro was moving up, it was a strong area of resistance. So you expect a pullback. That's certainly what you got. When you came back here, you were basically making a move of a move coming back into that 7 o'clock time frame on Sunday. And what you also happened to do, you did also 1.272 off of an expansion out here. So in order for this market to continue moving higher today, what you're going to see here is you'll see the euro, continue to move up. But that was a pretty big down thrust coming in that 8:30 time frame, meaning that really it's just in a sideways consolidation area. Until that area gets broken, the market's just really resting and creating energy, even if it is up 85, the Dow up 85 points right now. But what is it really all about? Where are some of the other signals that are out there? Well, what I pointed out to you yesterday was take a look at the New York Stock Exchange Index. In my opinion, that's the one that you really have to keep your eye on. So you got to keep one eye on the DAX for sure, because it's trading ahead of us. It's trying to get into the up channel again. You need to keep another eye over here on the New York Stock Exchange. And your third eye, that's the one in the back of your head, that should be looking at the euro. Well, when you take a look at the New York Stock Exchange, you take a look at yesterday, number one, as we pointed out, the gap here in the New York Stock Exchange gap I'm talking about, folks, is the June 28th gap to June 29th. The high on June 28th, 75.98. The low on June 29th at 77.30. That gap, folks, one of the largest in the New York Stock Exchange charts. I'll go back and take a look at the historical data here over the next couple of days. My data went back into 2004. I believe that's if I have more historical data there. And that was that was the largest single day gap up or down. Now, there wasn't a gap down, but the single largest gap that I was able to identify in the New York Stock Exchange. It says something when you see something like that, folks, even if it is the summertime. Doesn't matter. It was a gap out there, and, folks, it wasn't like it was a weekend gap. You're talking about June 28th to June 29th. You're just talking from day to day. I give, should it make a difference whether it's a Friday to a Monday? You get a little bit more time to energize and charge up. So this is just simply a large gap up there, and what you can see is that what the market did on Friday as it was moving down in the New York Stock Exchange, got down, tested it. I know it looks like a hammer candle, but it's not a hammer candle out there on July the 6th. And also, if you take a look at yesterday, you did have the New York Stock Exchange push down into that area, but it rejected it. It closed back inside the June 29th not swing point, but inside the June 29th candle out there. So now what do we have? We've got two gaps. We got a gap here down. That gap that we're talking about is the July 5th to July 6th gap. You're trading inside that area right now, and so if you get a close inside that gap, then what you'll want to do, what the New York Stock Exchange is going to want to do, is at least close that area. Then what you're going to want to be paying attention to, if it's going to do that, what it will do is it'll go up and tag that July 3rd area. You get a close inside 78.34. You do it with the right volume. What that really keeps in place here, folks, is the A to B equals CD up. That is still in place. This A to B equals CD up has not been harmed at all, so that's still in place. What that really does set up is a move into the May 1st highs. I suspect that is where the market still wants to travel to. And if you take a look at the retracement off of that B to C leg, almost a beautiful 0.618 retracement there. So it really sets up the move to 80.41. That would be on the New York Stock Exchange. So you want to keep an eye on that. If you take a quick peek over into the Dow, trading to the downside, General Electric, Alcoa, GE down 2 pennies, no big deal out there. Alcoa down 4 pennies. Merck, which has been a really strong performer out there, that's pulling back 12 cents. You've got Procter & Gamble down a penny. Otherwise, everything else is green. IBM up $1 and change right now. Over in the IBD area, if we take a look and see what is moving to the downside, You've got basically 5 stocks. Q-Core, Questcor Pharmaceuticals, having a big day yesterday, pulling back a little bit today, down 78 cents. Not a big deal out there. NetEase off 32 cents right now, and Cirrus Logic off 14 cents. To the upside, you've got Priceline up $6, Apple up $5, Chipotle up $1. Chipotle probably setting up another nice short opportunity. We can take a look at that stock as well. Under Armour up $1.36, SXC Health up, Transdigm up. So most stocks in the IBD are trading to the upside right now. If we go take a look at just some individual stock charts out there, let's go do that. Let's go see what Mako Surgical is doing, because they're having major surgery on their stock chart today. They're removing a bone, MAKO. And let's see if they're removing that with volume. Oh, they are. So Mako is in some big trouble. Certainly gave you that first signal that, they were in intensive care. That was on May the 8th when it gapped down with 13 million shares. Just simply comes back and it tests that area. Does that really for about three different time periods. Comes back into that area on June 11th with 3.5 million shares. That was going into 13 million shares. Does it again with 1 million shares. Does that on June 21st. Did that a few trading sessions ago, July 2nd, before the holiday, 956,000 shares. So now you've got your second fairly large gap out there. Of course, that sets up a third gap. Now, it's a really pretty chart here. This Mako chart is a great chart for you to learn from. One of the things that you want to take a look at, which was a really nice pattern, I wish I had been watching this chart here, was the candle formation on August 8th. Beautiful island reversal candle, folks. Island reversal candle. If you take a look at your chart, you'll notice on August 5th, the low was 23.26. The very next candle gaps down. The high ends up being 22.97. So you have a little gap there. What happens on the following trading session? The following trading session being August 9th, you have a gap up. So you get a gap up there, sets up this nice little island out there. When you see those island reversals, either on the top side or the bottom side, those are strong reversal patterns. And that's exactly what happened out here. Mako makes an A to B equals C to up. After that, if we take a look at the A point, you'd use the bottom of that island reversal. Your B point out here came in at August 17th. C point moves back down, and it makes a 1-to-1, A to B equals CD. Up at the $40.50 area, it actually gets up to $41.80, and then does a pullback, goes back up, and tries to tag that swing point again. When it was tagging the swing point, which was September 19th, that had 2.5 million shares. It got up there with 2.5 million shares as well. Now you've got this, if we go ahead and we'll take a look at this on a weekly chart here, see where this thing may be headed back to. But the volume, this is distribution. This is markdown extraordinaire, folks. So if we take a look at this on a weekly chart out here, probably weekly and a monthly, ooh, that is just disastrous looking. It doesn't have any volume to go back and test. All it's got is really a swing point low down at $9, trading at $15. Wasn't that long ago, folks, when this is trading at $45. That was in March of 2012, just a few months ago. It is why we use stops, folks. You just have to use stops when you are trading these markets, no matter what. So that was on Mako Surgical. Let's go see what else is popping. You've got Destination Maternity. Yeah, Destination Maternity. Apparently, they are struggling. Let's go take a look, trying to see what kind of thought process I could say about Destination Maternity out there, but there was nothing clean probably that I could come up with. So let's just go take a look at DEST out there. They are gapping down this morning, and it looks like they've got volume coming out of the balloon here. So it looks like they are probably in the intensive care room right next to Mako Surgical. They are trading down 139,000 shares right now. Now, that's after making a high with 298,000 shares. So not like this stock has a tremendous amount of liquidity or volume in it. Trading out at $72 here. And if you take a look at where the last high volume bar is out here, it's down in the $7 area, $8 area. So let's go put this on a weekly, see what it is doing out here. Just actually, so it looks like a... let's see, it closes yesterday, 21.96, opens at 21.99. So here you've got, a bearish engulfing extraordinaire occurring. So far already in just 16 minutes of time, it's taken back several months. going back all the way to February 24th as we speak here right now. So this thing is clearly headed to its last high volume bar out there. That would be in the $7 range. If we take a look at what the A to B equals CD down is on this little guy, this is going to take you at 1-to-1 A to B equals CD, get you down to 9.43, but it's at that $5.88 a one to 1.272 is where this thing is headed. Now, it's got to clear the swing point, the B point, which is October 2011 in the $12 range. So if you're in this stock and you're not out now, you have to be asking yourself why, because you can't come up with a good reason. Let's go take a look at, let's go back and take a look at Bridgeport. We were looking at that yesterday, BPI. That is, they did not get their accreditation, I believe, was the issue yesterday. BPI gap down yesterday with volume. Today, the continuation of that effect. And this thing is coming all the way back to its original IPO date, which was April 15, 2009. That's a great day. In fact, happy birthday to my brother. Today is his birthday out there. So on April 15th, that's another birthday out there. So you have BPI trade is going to trade all the way back to the $9.75 area. It may go lower than that, but it's at least going to trade back there. And so yesterday, the volume coming out of that thing, 7.7 million shares. Today, it's got volume as well, 628,000 shares in the first 18 minutes of trading out there. Let's go take a look at what is popping here to the upside. You've got leading the charge dollar-wise on the way up, VF Corp. VFC is the ticker symbol. So let's go see what this is doing out here. Trading out right now at 139.49, gapping up. Doesn't look like anything much more than a little consolidation that we have going on here. Now, when you take a look at this stock, this had moved down, and it moved down right into the high volume bar. That's why whenever you're taking a look at any stock chart, one of the very first things you want to do is just scan it with your eyes and look for volume. See where the volume is. It doesn't have to be a swing point. Just go ahead and take a look and see where the volume is, because that is where you truly have supply and demand. If we were just teaching economics chart reading 101, that's what we would teach you. We would say wherever you see a high volume bar, you can just simply want to mark that on your chart, because that is going to be a supply and demand area. That is going to be a support area. That's going to be an area where you have either institutional buying and selling that's going on out here. And you want to understand, is that institution still in place out here? In this case here, if you take a look at VFC, you would have gone back to the date of December 16, 2011, when it did 4.2 million shares. So as this thing was moving down, it moved down into the July 3rd time frame. Comes back into that same area with 803,000 shares. Same area being a low of 129.43, but came right down into that. That area was rejected. Now just simply moving higher. But it does look to me like this still wants a lower price out here, folks. That's on VFC. 877-927-6648. Dow is up 68. S&P up 7. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. You got the Dow up 73 points, S&P up 7. Let's go to Orlando. Let's go to our man Rich in Orlando. Rich, thanks for calling. Thanks for holding.
Good morning, Steve.
How you doing today?
Pretty good, pretty good. And yourself?
Excellent. Thank you for asking. You
That's
want
good.
Hormel.
Hormel.
Now, tell me what you're doing here. The ticker symbol, folks, that we're looking at is HRL. And, for me, Rich, I don't know about for you, but for me, that was a staple in my college days.
Yes, I've eaten enough of it myself.
No, this is the flavor I always got, folks. I got the kind without beans, but, I lived on a steady diet of Hormel chili and Stouffer's macaroni and cheese.
Yeah.
A little peanut butter here and there, too.
That supplements it, yes.
Exactly. Now, tell me what you're doing here and how I can help you.
Actually, just looking. It looked like it pulled back, but it's like it pulled back pretty heavy here. It had a nice ascending pattern.
Okay.
We've got higher highs and basically higher lows. Even when it dropped down there back in the 25th of June, it really kind of seemed like it just tested the low and backed off, and then it busted out with fairly decent volume. But on the pullback here, it just seems like the volume is heavier than it should be.
Okay. So, first thing
I'm looking for an entry point.
Are you? Yep, got it. Okay. So, on the monthly chart, folks, and you got Hormel, and great looking stock chart. It is trading up towards its highs for sure. Right now, trading out at 29.23, and the 52-week high is 30.70. The 52-week low, 25.87, does pay a 15-cent quarterly dividend out there, about a 2% yield. But what is nice when you take a look at a stock chart here is this gave you the go-ahead signal to come back into Hormel in May of 2009. That's utilizing the tool that I share with everybody in the special report that is available for you on the homepage of TFNN. It says special report, so you don't have to look too far. So on the monthly chart, it still looks good on the monthly chart. It's still in, what I'll call a buy mode out here. If we go take a look at the weekly chart, on the weekly chart time frame, see what this is showing us. It's really just consolidating, at the highs out here. The one thing you don't like about Hormel is just simply going back to March of 2009, where it has just simply massive volume out there. But other than that, this thing has just simply been consolidated in a sideways range going back to February of last year. So I guess the question would be, what is the upside? What's the why this stock? I would throw out there. Why this versus something else? I guess.
No. I mean, just as I kind of cruise through finding different stocks, this one came up, and when I've just been watching.
Got it. Yep. What I would, if you're looking for, so here's how I would take a look at this. This thing would have to break above the highs out here from July 3rd, with some kind of conviction. As far as the pullback, yesterday the pullback was on 1.2 million shares. That's coming into, as you pointed out, it's coming in with a little bit heavier volume, than you would like to see. But what's really holding it, and what's going to hold it in place here, looks like it's going to be this high volume area from December 7th. The low there is 29.12. You're 29.17. So on that day, you had 4.9 million shares. So, maybe this goes and trades down to the bottom of if you're looking at this from a trade standpoint, I'll answer your question. You'd like to buy it at around $28 and sell it at 30, because that's the consolidation range that it's in.
All right. I appreciate that. Thank you.
You bet. And thanks for calling. Folks, stay tuned. Tom and I will be up next. It is Terrific Tuesday. Following the Money Master Show, we go to Kate Stalter. Then we go to Victor Jones for a commercial-free, uninterrupted hour. Thanks, folks. Have a great day, and see you in just a few.
Well, it's always better when we're together. Yeah, it's always better when we're together.